Hello and welcome to another update video on MSTR. Yeah, MicroStrategy, the chart is, or rather Strategy Inc., yeah, as they are called now. Strategy has reacted to Fibonacci support and we are on our way higher, as it seems. So it looks as if Strategy is indeed following that preferred scenario that I shared over the last few days. If you watch the videos, then you know that at least I wanted to see a larger C wave to the upside. From an Elliott Wave point of view, this could be a wave 1 to the downside, which means a trending move down. And this here would be simply the counter trend move of wave 2 before we continue to go down lower in this scenario. This would be potentially bear market scenario, I have to say. We also said maybe wave 2 already bottomed here on the 21st of October. But for me, the microstructures don't align so well with that. And also, it would be a very, very weak wave 2. I'm not saying that's not possible. It absolutely could be the case. But yeah, I would just prefer a broader wave 2 for various reasons. It just aligns more with standard Elliott Wave guidelines, proportions, the concept of the right look and everything, which is also a guideline, you could say. So yeah, and also, I mean, the price held the micro support area as shared last week, right? So here between $276.93 and $287.20. So we then also broke above the initial signal line, not a decisive break. That was just here the last swing high, not so important. I think I'm going to remove this line, but this was the first barrier where the price got rejected on Friday. We now pushed above it. Okay, pullback, but the pullback looks like 3-wave move down. So I remain open to the idea that we could go higher. It's actually preferred in the short term towards $324 to $330. These are the two Fibonacci extensions here in the middle. 123.6 extension and the 138% extension. And then in between, we've got the $325 level. That's the 61.8 retracement. So a pullback level, yeah. Basically acting as resistance. So there's a confluence there of resistance. Now, if the market indeed follows this pathway higher and even reaches, well, no, not even, but if it reaches this area, yeah, and doesn't get rejected before, but indeed gets to $324, maybe even $330, it could also be the white scenario, and that is where the door opens to higher prices going forward and maybe even a more bullish interpretation. Yeah, basically, as long as we only have 3 waves up, as shown in orange, the bearish count has a chance. It's not necessarily leading. Yeah, it really depends on, and we can't tell the difference at the moment. It really depends on whether the bulls can, after this rally, hold a higher low in this pullback. There will be a support area. In the white scenario, this would be wave 4. And then from there, if we see any impulsive rally, that this could be our wave 5, then we have 5 waves up, and the orange scenario will become far less likely because a wave 2 corrective rally shouldn't be a 5-wave move. But it can be a 3-wave move. So as long as it's only a 3-wave move up, the risk is that this move up is just a corrective rally. Yeah. But overall, in the short term, I prefer this C wave to stretch a little bit higher. Told you what the key resistance levels are. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, also make sure that you follow our other channels, like, for example, the Morecryptoonline channel, where we cover a lot of different cryptocurrencies on a daily basis. Thanks so much. Bye-bye.